I'm actually really excited about this topic. Back in 2012, I was on my way out of a very large organization. And we were running a process. It was physical. It involved 14 pieces of paper. And it took 21 days. And the last thing I did in that organization was actually digitize all of that. And as part of that process, we followed those stacks of paper as they went through the organization. They went back and forth. They were being physically signed by people, so whenever you needed to make a change, you had to undo the signature and redo it. And it was causing a lot of emotional problems because that process was quite critical. And why am I talking about that? Because the next thing that we're talking about is real-world assets. And real-world assets are something that have been done in this planet for as long as we've had shiny things that we wanted to trade. And they are things that need to actually move from place to place. I know we'll have a lot of discussions around whether something is a commodity or not, but generally a commodity is something that needs to be carried somewhere and then gets transformed into something else. And the reason I bring up that story about the digitalization is that after about 48 hours, I had the process that we needed to follow. It took me 6 months to get it implemented because no one wanted to do it. And it's really, really interesting to have these people up on stage who are really going from end to end when it comes to real-world assets and turning that into a reality. Anyone have a guess how much money we saved when we took that 21-day process and we reduced it to 15? It's about $1 million a year. Because that process was a payroll process. It was actually moving people from one role to another. So we saved 6 days of salary on close to 1,000 people, and it really stacks up. It also gave us unprecedented visibility into how everything was going because we now had traceability into that process. And the funniest moment of it all was the CEO of the whole group who was looking at this and demanding why it was taking 21 days. I remember walking into the meeting and I had my stack of papers and this was all the measurements. I was a Lean Six Sigma practitioner at the time. And he said, okay, so whose fault in this? Who am I firing? And I said, sir, you're the problem. These pieces of paper are being gathered by your secretary, essentially. And because they don't want to waste your time, they're waiting until a certain amount of them stack up. And so you're only signing them once a week or once every 2 weeks. And every time you make a small correction on them, it has to go all the way back down the chain and get re-signed at each level. So long story short, we made it digital and we brought on all those stakeholders. I'm excited to bring in the next group. We have someone from the gold supply chain. It's not just someone who tokenizes things. It's someone who's actually been from the mining level and the sustaining level all the way up to digitalizing it and putting that certification in place. Y'all can come up on stage. This is going to be awesome. We have someone from the Emergo Academy who is going to be our amazing moderator to guide us through this discussion. We have the CEO and founder of the Zilliqa chain that has recently announced a partnership with Cardano, by the way. It's not that often you see a layer 1 crossover, so that's something definitely to pay attention to. And we have 2 people operating in the world of finance, one in digital asset custody and one in investment in these projects. So really looking forward to this and hope you enjoyed it as much as I did.
Not always fun to have a panel session right after lunch, but I hope this is worth it for all of you. We have a star-studded blockbuster lineup here. Most of the folks are from outside Cardano ecosystem, but building on Cardano. That shows what Cardano can offer, can feature, and the trust and credibility it brings to the ecosystem, right? So with that in mind, anybody who's in Web3 space has heard the term RWA, probably being thrown at them a gazillion times over the last 12 months. And that's our topic. But before we get into it, my name is Amar. I'm Global Head of Business Development at Emergo. I'm going to pass it on to all the individuals to introduce themselves, starting with leftmost. Over to you, Max.
Thank you, Amar. It's a real pleasure to be here in Dubai with you. My name's Max Cantiglia. I'm the CEO and founder of the Zilliqa group of companies. Our group consists of a layer 1 called Zilliqa, which is now 7 years old. We have a metaverse as a service business based here in Dubai, which is 2 years old, and a gaming studio, which is also 2 years old. This past year, what we've been doing is internally, we've been combining our ventures and externally partnering with industry heavyweights, including the Cardano ecosystem, to focus what we're doing on the world of luxury and entertainment.
Hi, I'm Julian Sawyer, I'm the CEO of Zodia Custody. We're a global digital asset custody, a custodian provider backed by Standard Chartered Bank.
Hi, Bandeep Rangar. I'm the CEO of Finekia. We're actually very aligned to the Cardano ecosystem. Amongst other things we're putting out this year and next year is a ETN, which is similar to an ETF for those of you not familiar, in Europe, which will be the first ETN to deploy Cardano on the DeFi protocols and generate an above market yield to create a disruptive model for ETNs. And we're looking at a RWA tokenization platform with a stablecoin offering actively on the Cardano chain and actively supported by, amongst others, Immorgan.
Hi guys, I'm Chris Lane. I'm the director of a public company listed in Japan. It's a gold trading company, started in the 1960s actually, a traditional finance company. We just recently rebranded to become called Unbanked. We have a gold-backed token called Kinka. We're trying to open up new sales channels to help us buy and sell gold, because that's our core business.
Well, there you have it. Thanks a lot, gentlemen. So we have Zodia, we have Zilliqa Group, we have Premfina, we have Unbanked and Kinka. We are talking about different assets which are getting tokenized real time. Gold, luxury goods, finance bonds, and most importantly, custody of it all, isn't it? So with that in mind, before we get into digitalization of assets, I want to ask about digital assets, which is crypto, right? How do you guys see crypto evolving in coming 2 years, 5 years in general, right? Because last 4, 5, 6 years, from the dawn of ICOs to metaverse to DeFi to NFTs to what have you, where does this go? Where do we start? So I'd like to start with you, Julian. What do you think about it?
I think over the next 5 years, there's probably three main themes here. One is regulation. We're seeing that happening across the world. And I think that's super important. And while every regulator is doing things slightly differently, there is a lot of alignment. I keep the US out of that for a moment, but if you look at what's happening here, what's happening in APAC, what's happening in Europe, there is a greater alignment. So regulation is going to be key. The second one, I think, is around products and use cases. We talk a lot about crypto, we talk a lot about layer ones, layer twos, etc. We should be talking and will be talking much more around real use cases that help real people and real organizations, and I think that is super helpful. And then the third element is the institutional space. We're seeing more and more institutions coming in, making this mainstream, making this part of financial services, which is obviously where my heart is in terms of what the industry is doing at the moment.
Thanks, Julian. Bandeep would like to hear your views as well. How does crypto evolve from here?
Look, I kind of will echo the sentiment just made before, and I think the real test case for me is so we're all used to having bank apps, and we're also all used to having like Amazon apps. I kind of see the future where buying tokenized assets should be as easy as buying a bottle of water on Amazon through your banking app, right? When that's the litmus test for me of mass adoption. And it should be as easy for your mom to do it or your nephew to do it. It should span that generation gap. And buying it should be a click of a button, and they should know what they're buying. Are they buying a tokenized share note token off Tower Bridge in London and getting the toll that is generated from it? Or are they buying into an insurance-linked note that has insurance risks associated? We want the education curve to go up and the mass adoption curve to go up. It's all fine to create it institutionally, but unless you get the mass adoption, it does not get ubiquitous. To me, that 5 years down the line, that looks like a rosy picture.
Got it. So just summarizing here, institutions coming in, everybody requiring custody. It should be as easy to buy as buying a bottle of water. Yeah. Basically, it's all about user experience rather than the back-end technology that we talk a lot about. That's my key takeaway from it. I want to be inclusive, so I want to quickly get views of Max and Chris as well. So first, Max, you, and then over to you, Chris. Same question. How do you see crypto evolving?
I think very briefly, we're on the expansion curve right now, right? Last month, there were 220 million active wallets that interacted with the blockchain within that month. That's 3 times the number from a year ago. 18 months ago, did we think that exchange traded products would actually come to life? I don't think so. So I think that regulation's going to move swiftly. It will have to. A bipartisan US will help that. But I think also for me, the major feature of this is that the layer one infrastructure is becoming much more scalable, and the costs of transacting are plummeting. These are all good for developers, users, enterprise customers.
Yeah, from our standpoint, I mean, trading gold or pretty much anything on the real world asset basis, it's incredibly unaccessible before tokenization. With tokenization, you're able to fractionalize it and just so much easier to own it, carry it, move it around. I think that's going to become more and more basically a digital store of value, whatever it may be underlying it. But I believe going forward that tokenization of real world assets will kind of be the next generation of how to move and just generally buy things. I mean, gold in itself is as fungible, should be as fungible as the dollar, but it's just simply not that easy to transact with it. But tokenizing gold, we believe you could store it in your wallet and you could, borrow against it and have credit against it. And we'd like to see more, everyone said it, mass adoption be more thing, the regulation to allow mass adoption. But also from even the issuer standpoint is to be able to offer more transparency and accessibility to everybody.
Well, thanks. Since Chris opened the door and went straight to real-world assets, I'm going to take his lead and basically ask you folks. Let me start with Julian first. Why? Because as you tokenize real-world assets, you're tokenizing asset classes which have regulations around them, right? Mm-hmm. So we are talking about tokenized equities, commodities, fixed income markets, what have you, right? How do you see the future of custody evolving? Will you have different kind of infrastructure for different asset classes, different kind of NFT supports or digital asset support? What regulations will you be holding multiple licenses or one? Again, nobody has a crystal ball, but just your opinion, how it will evolve.
I think in my mind there's probably two different ways of addressing this. And if I just take a step back, normally when there's innovation in technology, it is the startups, it's the innovators, it's the entrepreneurs that change the legacy infrastructures that's out there and the legacy providers. I think with tokenization of real world assets, it's happening top down and bottom up. So there's a hell of a lot of innovation happening from small companies, entrepreneurs, and we've seen a lot today here as examples. But we're also seeing the big financial institutions coming together, working with regulators, working among their competitors on solutions. So things like Project Guardian in Asia is a very good example. And so this isn't going to be about a load of entrepreneurial opportunities. It will be some of the big banks will be doing it, the big banks with regulators, regulators with regulators are looking at this. So for us, it's about being in the middle of that, being able to support the entrepreneurial concepts and people and projects, as well as also ensuring that we are supporting the large financial services who are wanting to be in this market. So what does custody mean? I think we then separate those into two parts. We use the word tokenization. Actually, what we mean is the custody of tokenized assets. That's what we care about. The tokenization platforms that does the minting and burnings and does everything else, there's a lot of people who are doing that and they're very, very strong with that. So for me, it's about having a set of protocols that we are regulated. They're just digital assets. They're very similar to crypto as far as we're concerned against our technology platform. And regulation's got to keep up with it. And this is going to always be a problem if we are constantly having a debate about, is this a security, is this not a security? Can I do this in Dubai, but I can't do that in Singapore, etc. And that will change. And I think that the point made earlier about regulation speeding up is critically important, because those markets, those countries that have the regulators that are adapting quicker and probably more principle-based rather than rule-based, I think will win the day. So I think your answer to your question is very complex. At the end of the day for us, it's just about having some tokens on our platform and supporting that. But that regulation overlay is going to be a real challenge.
Thanks, Julian. And I really appreciate and acknowledge the complexity of the question that I asked, because in my mind, custody becomes a very foundation of a prime brokerage stack. People, don't only want you to custody assets, but there will be a OTC demand around it, liquidities around it, lending, borrowing demand, using it as a collateral and so on. it's a very complex stack. How do you do it against tokenized metaverse asset? Who will use it as a collateral? So I'll come back to that later, but just teasing some ideas. Since we're in Dubai, luxury goods are not unknown to everyone. And I know Max has insights into luxury good markets, cars, and so on. So let me bring us into that niche, right? How do you see tokenization will work in that industry? What are the advantages? How does it play out from here on?
Okay, so I'd like for us to think about a customer-first approach. Number one, the world of luxury is having a down moment right now. It needs some help. Number two is that for the last 4 years, I've been studying the spending behaviors of Gen Z and now Gen Alpha, who've grown up in a social gaming environment. 1 in 2.3 people today on the planet is a social gamer. These audiences, Gen Alpha and Gen Z, in about 3 or 4 years' time, become the biggest ever spending demographic ever in history. And the way that these audiences are consuming luxury is very different to people, certainly of my age. And physical plus digital is blending. For them, it's a singular experience. In Gen Alpha will become the most complete, I suppose, digital native audience that we've seen. And so we foresee a world where, certainly through our structure, through a spatial web front end and a Web3 back end, because ownership is really what Web3 provides us, we see digital twins of high-end luxury products, collectibles, providing authentication, provenance in a way that hasn't been possible without blockchain technology. These younger generations are not just about product ownership, they're about experiences. And we see exactly how tokenization can help people to attend events, special events that otherwise they would not have been able to. Loyalty, I think age-old loyalty programs can be replaced with real-world tokenization too, in a way that I think, again, appeals to this generation. So I think I'd like for us to think about that generation before we start to get people of maybe different ages to adopt these technologies too.
Very good. Thanks for that, Max. These are real-time, real-world use cases that are coming out of this discussion. Very interesting. Thanks for sharing your inputs. Next one, I'll come over to you, Bandeep. Completely different asset class, insurance, bonds, premiums. Are we thinking of teasing tokenization in that industry? If yes, why? What problems does it solve? It's a bunch of questions packed in one, but over
sure,
to you.
and I might make some comments on some of the earlier comments made too. So look, ultimately, why do we want tokenization, right? We want tokenization to get a broader market, allow for fractional ownership, accessibility, liquidity. And if you look at some markets out there, look at the art market, right? So in most markets, you have an 80-20 rule. Well, art doesn't work that way. Art works on an 80 and 4% rule, which is 80% of the value is in 4% of the art, right? So now you have 96% of value that's not really tapped into. Tokenization allows for you as a Gen Z, or maybe not you as Gen Z, but someone else as Gen Z, to buy a part of that. You can have a collectible basket and say, I'm going to own part of a painting, part of a watch, and part of a guitar, whatever is collectible of interest to you. And that becomes much more user-friendly when you get this mass adoption. Now, I agree that there's a top-down part as well, because there's a lot of contradiction in the way regulation is right now. So on the one hand, loyalty points for hotels or airlines, which represent economic value, which are tradable, are completely fine to use. But if I tokenized staying at a hotel, that would be a security token because that represents economic value. So there's these lopsided views, and I do feel that unfortunately we do need regulation to work in our favor, because this is one of the few industries in the world that is begging for regulation. Like most times when you start a company, you want to stay clear, but crypto guys are saying, you know what, get us freaking regulated because we want to be trusted, right? And that's not happening. I do think there's been a watershed in Clayton Christensen's terms, like we've crossed a bit of the chasm with the legitimization of ETFs that can hold digital assets. And that's a major watershed event. And that's going to open the floodgates for a lot more. And what does that more look like, right? So let's look at various sectors. You look at private credit, you look at insurance, you look at private equity. I was with somebody called Jeremy Collar, who heads up Collar Capital. Collar is one of 3 secondary market purchases of private equity. In private equity, the biggest exits for investors are not the sale of the underlying investment through an IPO or a trade sale. It's by selling block positions in a fund to another private equity fund. Now, in that market, that's about 110 billion across those top 3 players. Retail participation is 3%, and that's through private wealth managers and private banks. Compare that with the stock market, where every trade is a secondary trade. Once Microsoft goes public, that's the primary. Every single stock trader after that is secondary. Well, that's 60% retail. And of the global stock market, 60% is in the US. So we do need the US to take the lead, because that's still the economic powerhouse of the world. And dovetailing the growth and adoption of RWAs is the adoption of stablecoins. You can't have RWAs without a stablecoin. Why? If I tokenize art, or if I tokenize, going back to insurance, insurance is one of the biggest illiquid, transparent, complex markets out there, because people, one, don't get it. It's fairly opaque, but it's also one of the most valuable assets. So when you look at RWAs, one of the theses behind that is that you want to be outside of the crypto volatility. That's what RWAs represent, because you can predict the volatility in the real world, which is much lower, and that's translated in terms of pricing from oracles onto the blockchain, correct? In the financial services sector itself, it was recognized about 15, 20 years ago that insurance itself was uncorrelated to financial markets or the macroeconomic conditions. Because insurance is based on annuity streams. It's a well-regulated, well-capitalized market. It doesn't matter if the stock market gyrates. It doesn't matter if the economy contrasts. You will still buy car insurance and home insurance, and this building will still buy insurance for property. So it's an annuity stream-based business that has its own special categorization as insurance-linked notes or insurance-linked securities. Now, if you're looking at stable coins, you're looking at RWAs that are uncorrelated to crypto, you actually have a double, like the best of the best. You have like not only uncorrelated to crypto, uncorrelated to financial markets itself. That's a huge asset class to go after, just the way private credit is or secondary markets. That tokenization curve has to occur. Now, you can tokenize whatever you want. Tokenization is like having shares in a company. Unless someone's buying it, it doesn't matter diddly squat. And the only way to get that is, one, stablecoin adoption. And then you look at a 3 trillion market adoption of stablecoins is because RWAs are driving stablecoins. And second, you mean that mass market adoption through the wallet experience of purchasing tokenized assets. That's as simple as buying that.
Okay, got it. Long answer, but I'll let you finish it because I think this is important for people to understand how different asset classes, what problems they're having. In my mind, I don't think everything needs a stable coin, or tokenization of everything needs a stable coin, but in my mind, stable coin is just an easier way to understand. I don't care what insurance is. I'll buy the stable coin, give me the yield, that's my participation, right?
It's a conduit. You can tokenize an insurance or art or whatever, but how do you price it and how do you buy it? You can't buy it with a volatile currency. That's what I meant.
You're right. 100%. So very quickly, I'm mindful of time when I had the timer here. I'll give 1 minute and I'll cut short everyone there. Since this is Cardano Summit, how is your project working with Cardano or supporting Cardano? So I'll give about a minute each to everyone. Starting with you, Chris.
Well, this was easy for us. We're a really old school, traditional kind of gold trading company, and no one's heard of us outside of Japan. Everyone knows us in Japan. However, we're not able to actually market or sell our coin directly to Japanese as a listed company until we're listed on the Japanese regulated exchange. But in the global ecosystem, nobody's really heard of Daiichi Commodities or Unbanked at all. So partnering with Emergo. So Emergo, we've signed a partnership agreement, and Emergo is going to help us to bring our token from just one of another ERC20 gold token to be the biggest gold token in Cardano ecosystem. And we want to market our token to all the ADA holders. We want to introduce stake pools to start really interacting on a Web3 basis as a traditional Japanese financial company. So Emergo is really helping us with that, and we're hoping that adding institutional kind of partnership to Cardano is going to help bring Cardano out to the global, kind of more traditional finance investors as well.
Brilliant. Thanks, Chris. I'll go over to you, Max.
Yeah, so we're delighted to have announced the beginning of a partnership with the Cardano ecosystem, commencing with Emergo. Initially, we're talking about creating bridges that help us to integrate populations on both chains, particularly as we begin to reach out into the industry segment that I was talking about. My analogy here is that if you know the UK road system, you need motorways, but you also need A roads and B roads, little roads that feed into the motorway to make efficient flow of traffic. And for me, this is a beginning, hopefully, of a very interesting relationship, which is about interoperability. I don't believe in monopolization of blockchains.
True words of wisdom, democratization, not monopolization. And I firmly believe that all roads lead to interoperability. So in future, you might have 100 blockchain, 100 infrastructure, but nobody's want to hold 100 wallets, 100 apps in their phone to manage 100 chains. So that's how it's going to play out. Everything will work with each other. Very nice. 1 minute, over to you, Julian.
Yeah, so we list ADA and obviously some of the side chains like Midnight and do staking, and I think that's the basic hygiene level. I think the bit that we can add into this ecosystem is legitimacy from a financial services perspective. So we're owned by the banks use us, that gives us trust, because I think underpinning everything that we've said today is the word trust in terms of if you are going to tokenize real world assets, you need to make sure that you can custody them, that you can authenticate them again against the original asset, etc., etc. And so I think that's the next stage for what we're wanting to do, is that legitimizing this for a financial services market where they can trust the infrastructure that is there.
Very good. Very nice.
Cool. So we're going to attack the insurance industry, this like very inert, very big, unutilized asset. And we're very happy and proud to say that both Nikhil and yourself are supporting us from Emergo's perspective to tokenize insurance assets and offer them on the Cardano chain. We also have the blessings of Charles Hoskinson, who's supporting us with creating this protocol, and we're using your tokenization engine for that. So we're going to unlock a lot of value by literally going after this very complex and somewhat opaque asset class that's waiting to be tokenized.
Brilliant. So just to summarize, interoperability being enabled with Zilliqa, tokenized gold of a publicly listed company coming on Cardano, tokenized insurance assets coming, and most importantly, financial support, not financial support, support for financial institute in terms of custody for Cardano native assets coming in near future as well in a regulated manner. A lot of big things happening. I know we're running a short on time. That's my duty. Sorry for chasing on that. But I'm still keen to ask a few more questions, right? So we talked about how crypto evolves, but I want to go a little bit more deeper. How does RWA evolve from here? We have all heard of tokenizing equities or, let's say, real estate, gold, what have you, right? 5 years from now, what else is getting tokenized? How does it look like? Probably 30, 40 seconds to each participant. Starting with you, Bandeep, this time around.
Well, I think there's, again, a lot of assets that are waiting to be tokenized that are not. So we know all these like untapped, can you have fractional ownership of solar panels and tokenize that? I do think you'll find synthetic products coming around, so you'll have tokenization of tokens themselves, like almost like ETF industry started that way, like the synthetic products. So I do think there'll be financially engineered products around tokenized on the future value of tokens that are then brought back to a net present value, and you can create some kind of synthetic derivative around that. I think it's going to get very sophisticated very quickly, and you spread the risk from the asset.
Very interesting. Chris?
Yeah, the synthetic asset is really what we're talking about here. I just think it's going to be a lot more liquid. Trading anything in the real world it requires brokers and storage. And everything becomes a lot more effective when you have one person that takes custody of all the assets, and yet people are out there trading a much more liquid thing. And then once you get into the different DeFi pools, I mean, that'd be huge. Once the average Joe can go in there and start derivative trading on the back of gold or silver, granite, or whatever it might be, every commodity is fair game, I think, for tokenization, as long as you trust that custodian of the physical asset. and the general market, the democracy of the market.
I like that. So real world assets, but also on DeFi, and DeFi has to evolve to support these regulated assets. Very interesting thought process. Over to you, Max.
Yeah, so I would agree with what's already been said, whether it's about financial products or luxury products. I think that regulation has to become a little bit more favorable. And I think liquidity provision is everything in this space. But I think that for the luxury world, the aspects of authenticity and provenance which really do create a huge fake market in luxury, high-end luxury goods today, can be overcome by RWA. But I think in order for all of this to happen, blockchain technologies need to become really easy to work with and easy to use for users.
Very good. And Julian.
Agree with the panel. I think when you talk about regulation, I think some of us are thinking about ensuring about securities and things like that. But if we're having this accessibility that Chris has mentioned, what about consumer protection? If they can suddenly get access to a whole range of products and services they don't understand and are not qualified and trained and informed and educated, then that is a challenge. So we need to think about regulation as a whole. I think if you look at the exam question of when is tokenization going to start, well, it's already started. You know, stablecoin is a tokenization of fiat. So I think we need to move away from when is it and find real use cases that we don't actually talk about RWA and tokenization. It's just like, we've managed to do this. It is either cheaper, quicker, better, more authentic, whatever the right thing, but solving real world problems. And I think that is going to be important when we can get out of our bubble, our crypto bubble, and start talking to real people and solving real people's problems will be the real end state for all of us.
I think just one quick comment there. I think AI is going to play a big role.
Yes.
And I think if you look at provenance, so is this a real Drake song or a fake Drake song? You can't tell when you listen to it, not at all. But if you have the ability to create that provenance in the blockchain, you can then distinguish what's real and what's not. And you may choose to have a market for both. But I do think that there's going to be a real powerful role for AI and actually almost like a check and balance between AI and blockchain.
Yeah, I totally agree. Actually, when I was about to summarize right now, you kind of stole words from
Sorry,
my
mate.
mouth.
I'm reading your mind.
AI was something which was in my mind. Actually, just a teaser, tokenizing human equity, sweat equity, all that stuff. That will also come into play. Because all you're doing is, so how human life works is people take student loan to study, then they get a job, they pay off loans. What if instead of that debt, people are selling equity in themselves or whatnot, sure. Right? Again, imagination is the limit. I know time is up, but I still want to give 20 seconds to everyone to say final message. 20 seconds starting with Max. Any final messages?
Whether you're a developer, a business, or an entrepreneur, experiment. Don't point fingers until you understand why this technology is so very powerful.
Julian?
The future is bright, and embrace it, but solve real world problems.
Bandeep?
The investment opportunities are now before you get to mass adoption. By the time it gets normalized, you've lost that arbitrage between the present state and the future state.
Chris?
Yeah, I think really we're just getting going, and the more conversations you have about any of the topics, it's just the more you learn. It's an education that we need to spread across everything. When I first started this, you didn't know anything about it, and then now, after multiple conversations over multiple years, you just start understanding and make it deep-rooted, kind of get everybody crypto native to make it easier going forward.
Brilliant. So just moderating this panel gave me a lot of insights. Ladies and gentlemen, give a big round of applause. Max from Zilliqa, Julian from Zodia, Bandeep from Premfina, Chris from Unbanked Inca. Thank you very much. All of them flew in just for this panel.